I've been in crypto for 5 years now, and I've lost over $100,000 during the past 2 bear markets. Today, I've created a list of the top 10 mistakes I've made so that you can avoid them. The first and biggest mistake is leaving crypto forever during the bear market. Look, I realize things get nasty during bear markets, and it's totally normal to feel like giving up when you watch your portfolio drop over and over and over again. But I think Warren Buffett put it best when he said, be greedy when others are fearful. Because if we look at historical data, it was those lowest of lows where we could find 100x or even 1000x opportunities going into the next bull market. No joke, go look at Aave or Matic or ADA or BNB, just to name a few. You gotta realize that there's life-changing opportunity during bear markets. So if you stay disciplined and execute a good strategy, then you can maximize your ability to get those gains. But even if you don't leave crypto, another huge cardinal sin that people make is running out of dry powder. This just means that you spend all your cash and you have nothing left to deploy. I'm ashamed to say that this happened to me in prior bear markets. I was so eager and was like, wow, what great prices. I'm gonna buy the dip. But I did that too much, too soon, and I had nothing left to deploy as prices continued to fall. So here's 2 tips on how to avoid that. First is have good cash flow, like get a steady job so you're not just trading all day. And second is dollar cost average real slowly over a long period of time instead of just going all in per your gut feeling. I recommend spreading out your cash across an 8 to 12 month period. Heck, maybe even longer if you're expecting the bear market to continue. That way, even if prices continue to drop or go sideways, you'll still be able to get those lower prices instead of being forced to watch from the sidelines. But even if you don't run out of dry powder, if you try to time the market too much, you may miss out on the entire opportunity. I know it's normal to be like, oh, I'm just gonna wait and then smash it all in when the bottom is here. I mean, sure, you can do that with some of your capital, but let's be realistic. It is extremely hard to spot the bottom. That's just not how markets work, or else everyone would be god-tier traders and make millions. Last bear market, all those expert traders were waiting for BTC to reach $1,000 because their fancy charts and models told them so. But that never happened, and those of us who listened to them missed out on 3K BTC because we were all convinced it was going to 1K. So if you really can't tell when the true bottom is here, why risk your entry on a complete guess? Well, let's say that you have dry powder and you're not trying to time the market, but one mistake you're likely still making is relying on bull market valuations too much. You gotta get rid of any concept of value that you learned during the bull market and throw those sky-high valuations out the window. Just because things are cheap compared to before doesn't mean it's good value right now. If we study historical bear markets, many projects dropped more than 90% from their all-time highs and never recovered to those levels in either USD or BTC values. So what can we do about this? Well, first, we gotta knock all our mental valuations way down. And second, we need to be way more picky when evaluating projects. It's no longer going to be easy to find projects that will rocket for no reason. You're going to have to dig deep and find projects with truly solid fundamentals so that you can be confident that you're picking the right ones. But even if your evaluations are grounded, there's another big mistake that everyone makes. But before we get there, a quick shout out to our video sponsors, Bitget. They are an up-and-coming exchange that's doing a special program just for the Coinsider community. It's their trade to earn program. Basically, when you trade futures on their platform, you get your trading fees returned to you in the form of BGB. So yes, you can earn their exchange coin without even buying it in the first place. And their exchange coin is packed with utility that I'll cover in a later video. Anyways, to qualify for this program, just sign up for an account using my referral link below and then transfer some USDT to your futures account. Then just trade as you normally do and you'll receive the BGB back every day at 9 p.m. Singapore time. There is a limit of 500 USDT back per person, and it's only for new users who haven't traded on their platform yet. But if that sounds interesting to you, then go check them out using my link below while it's still offered for a 14-day period. Alright, so the big mistake that I was referring to is not readjusting your portfolio to weather the storm. Look, the truth is, the risk-reward calculus is different. for bear markets versus bull markets. So we don't necessarily want to be all in on the projects that are way out on the risk spectrum. For example, low cap altcoins. They have amazing gains during the bull market. No doubt about that. But those get pummeled so hard during the bear market. Also NFTs, those are arguably even worse because the liquidity is just not there. If you wanted to dump your altcoins, you could do so. But if you wanted to dump your NFTs, you'd have to wait until someone grabs your offer, even if you set a super low price way below the floor price of the collection. Now, I'm not saying that you shouldn't hold any altcoins or NFTs, but just be cognizant that those riskier bets are likely to lose value way faster during the bear market. So adjusting those to be a smaller percentage of your portfolio is a savvy move. Now, during bear markets, we sometimes see those big crashes where prices drop like 50% in a single day. And it's during those bloody days when people make the next mistake. They panic sell. You definitely don't want to do that because if you look at historical data, rarely do prices go down in a straight line. After big crashes, there's usually some sideways consolidation or maybe even a small relief bounce. So if you panic sell after a big crash, you're likely selling the bottom, or at least a temporary bottom. Now, I'm not saying not to sell during a bear market. I've already said that selling is good, but you want it to be planned and based on a well thought out strategy. Forced selling or emotional selling rarely turns out to be a good decision. I've actually gotten way better at not panic selling over the years. And a big reason why is because I fixed all these mistakes that I'm covering in this video. And speaking of mistakes, the next major one is diamond handing your coins all the way to zero. People who do this are succumbing to the common psychological effect called the sunk cost fallacy. They think, okay, I've lost so much already, so I'm just gonna hodl until it recovers. But that's not the optimal strategy because let's say one of your bags are now worth $100, down from the initial 1,000 that you put in. You could hold on to it, and sure, it may recover, but if you sold it at that point and put it into a more promising project, it could recover much faster and even go higher than the original project that you were stubbornly holding. After all, fundamentals do change, so the original project that you picked may not be as promising as a new one that you've come across. Also, bonus tip, if you sell your bags at a loss, you could lower your future tax bill by doing something called tax loss harvesting. Now, there is a shocking transformation that I've seen during bear markets when the most bullish people turn into the most bearish ones. And it's those people that make the mistake of shorting too much because they think everything's going to zero. Some people get super frustrated seeing more and more drops during a bear market. And they're like, F it, I'm gonna short hard and make money while it keeps dropping. I mean, I'm a fan of shorting to hedge, but if you become too much of a stubborn bear, you could be shorting all the way into the next bull market and lose way more capital than is necessary. So definitely check your own psychology and don't get caught up shorting like a perma bear because the market moves in mysterious ways and it likes to cause maximum pain for the most investors. One way to inflict that pain is to start moving up in price when the most bullish people flip to going short. Now, another common emotion that comes out during bear markets is anxiety or restlessness. Like people lose a lot of money and they really want to return to their previous net worth when things were at all-time highs. So they make the mistake of revenge trading, aka doing risky stuff and try to make it all back in one trade. This is a surefire way to lose money because you're succumbing to emotions and taking on too much risk. Heck, it's even rumored that the infamous Three Arrows Capital Fund tried to make it all back in one trade when some of their other bets went wrong and they got desperate. That's what led to their margin calls and then their eventual bankruptcy. So please don't resort to revenge trading during the bear market. Instead, go outside, take a break, or even leave crypto for a bit. At least your portfolio will still be there when you come back and it won't be liquidated. But it's not just emotions like anxiety or fear that run strong during a bear market. Sometimes the dominant emotion that people feel is boredom. And it's those people that make the mistake of taking risky actions in order to chase that thrill that was so prevalent during the bull market. Like they start margin trading or going all in on some small cap coin just so they can scratch that itch and ride the emotional roller coaster once again. Let's be honest, many people in crypto are true degens, and they're here because they like to gamble. So if it wasn't for crypto, they'd be at the casino or sports betting perhaps. But during a bear market, you don't want to start doing those things because they will likely lose you money and we're trying to preserve our capital here to set ourselves up for bull market success. Now, if you're wondering what to do instead of all these mistakes, then watch this video for my ultimate bear market strategy. See ya!